The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien coming to you live from TFNN Friday morning, 9:06 a.m. We got about 24 minutes to go until the start of trading, and you have markets kicking things off to the downside. But some context in terms of where we were on Tuesday, folks. You almost can't even see the pullback in this market right now. You got the S&Ps off 0.2%, just more than 0.6% in the red this morning. But you check out the acceleration from 41.29, folks. We are trading up 240 S&P points from that price level at 43.73. We actually got a 4,400 handle towards the close of action last night. NASDAQ 100 back above 14,000. Tuesday, we had a 12,000 handle. Remarkable. You're off 0.7% right now, 104 points. But man, quite the acceleration off of the lows of Tuesday. Dow off 184 points right now. We trade from 32,600. We're back above 34,000 in the Dow. We're about 1,575 points, folks, above where we were just Tuesday morning, a little bit more than 72 hours ago. Remarkable how things can change just that quick, especially coming into a Fed meeting where the Fed hikes for the first time since 2018, and they're going to keep hiking, folks, all year. That's the plan. We'll see if the data allows them to do that. Crude back above $100. There's your 10-day chart on crude, down to $93. Quite the acceleration. Yesterday, you rise to almost 105. You're back to 101.57, basically flat on the session after some volatility. Zooming in on the action, as recently as about 3 a.m. this morning, you were up to 104.67, the price of crude. Gold contract been pulling back. Gold off $6 at $19.37. Wednesday's low was $18.95. You traded a little bit higher yesterday, made it up to almost $19.50, and we jumped to notes and bonds, kind of just chopping around from where we've been on Wednesday's action. Right now, you get the 10-year positive by 6 ticks. We're sitting with a yield of about 2.15%, pretty much where we've been comfortable since about Tuesday's action. Now, what's interesting here is no real movement in the 10-year since Tuesday. And at the same time, you got markets up dramatically. I just went over them, right? Can't even overstate the move that we've had in the last 3 days of trading. The VIX reacting so. 25.25 was the low of the close yesterday. The VIX this morning 26.40. All right, let's jump around to some of the headlines we got going on. We'll kick things off with a little geopolitical, as has been the theme lately. But this is an interesting one. So Goldman, they're now saying the market's a little bit too relaxed. Maybe the rally a little bit unwarranted with the volatility in play here. Pricing makes assets vulnerable to deterioration, Goldman says. You get the stock 600, almost erasing the losses since Russia's invasion. Global markets, not just our markets. They're talking about maybe getting too relaxed about downside risks related to the war. Not good from a humanity perspective, that's for sure, but warning that current prices no longer reflect more negative scenarios. Doesn't mean they're likely, folks. But the risk to the downside is pretty elevated when you think about even the small chance that things really degrade over there and things get worse, which the market, of course, would not like with tensions escalating of war in Europe, and where that would stop spreading, nobody knows. The recent outperformance of European assets and a reversal of sharp gains for oil prices points to a significant relaxation in the market's assessment of the global implications of the invasion. That's a couple strategists writing in a note. Assets are now more vulnerable if progress towards a resolution proves fleeting or if energy supplies are disrupted more severely. Now, I'll take that and jump to this article that I was reading, I believe, last night, talking about the President Biden's team hardens view of China tilting to Putin on Ukraine. I said, that's not good, man. Hopefully they don't have the right analysis there. Many U.S. officials believe Beijing is tactically backing the Kremlin. I would agree with that. They're going to do it as best they can in the most self-serving interest that they can. China denies support for the war, says Russia did not request arms from them, which has been reported, but the muted response alone says a lot. And that's kind of what Biden's talking about here. The people who asked not to be identified because of sensitivity did not offer details on how China might be able to offset the economic consequences of sanctions. Yeah, China's going to be very wary of grouping themselves into the sanctions that are coming with China right now, especially as you have them denying already that they're tacitly backing the invasion, but not good in terms of seeing these types of headlines that they're a little bit worried that China may be going to start siding with Putin there, hardening the view that China is tilting towards Ukraine. Somewhat lines up with the Goldman analysis saying, hey, listen, doesn't mean that it might be likely, but you better realize, man, that the chance of things escalating is definitely greater than zero, is how I like to surmise things. And this one is far greater than zero in terms of the probabilities, unfortunately. So, all right, let's jump around to some of the stocks that are moving this morning. We got some companies out with their numbers. We'll kick it off with FedEx, $4.59 a share. They missed by 5 cents. Pretty close. The delivery service revenue beat the analyst forecast. Bottom line impacted by worker shortages stemming from the COVID-19 Omicron variant during the quarter. FedEx, you had a little bit of volatility in both directions as they come out with their numbers after the bell last night. You settle a little bit lower. You're down about $5 to $6 right now at $222. You're only back to where you were on the open yesterday. You spiked to $237 last night. All things considered, you take a look at FedEx, you're right back to that 50% retracement of the entire move you had from COVID up to $319. The 618 sits at about 186. We're going to open today at about 221, just above that 50% line that we've been chopping around at. The lows going back to October 4th, that low 216. So we'll see where we open today. Look for that hold potentially to give, look for that price area to hold if you're looking for a bid on FedEx. Things go south, maybe you're looking at 186. Quite a pullback from 320 when you think about the acceleration for FedEx shares. You're back to about 222. All things considered, you're only talking about a $5 move for FedEx. They had about an $11.31 move priced in last night. So not quite the volatility, but we'll see where the market goes on the open for FedEx in about 17 minutes from right now. GameStop. Also, the original Reddit meme stock reported their earnings. They're a little bit lower in the pre-market. Revenue topped estimates. Unexpected quarterly loss. Not what you want to see, though. Their CEO said the Omicron variant and supply chain issues had a significant impact on results during the holiday season. Not what you want to hear, right? Now, GameStop, you jump over, we're down about $7, I think. Yeah, you're trading at about $80 right now. That's a weekly. That distorts things a bit. There's your 15-minute action on the close yesterday from 87 to 80. Now, I believe they had about similar move, $11 priced in terms of the move. You moved about $8. So again, not living up to the volatility priced into the options coming into their earnings event. And where this one ends up falling in terms of resting, who knows, man. But you are in some scary territory here for GameStop because you're at $70 right now. I'm going to zoom in on this action here. I'm even going to put it on a daily real quick as we wrap up this first segment. I'm just going to take where we were for the acceleration up to $483, bonkers to say the least. You're at $79 right now, folks. Let me find $79 on this chart. Here is $79 on this chart. As you can see, almost anybody trading GameStop during the meme craze is in a substantial losing position right now. Hopefully they were not buying and holding as this thing was chopping around 200 or even 150. Sadly enough, you know that that's probably the case. Nothing saying this stock can't at least go back down to $40 to test where we were. I mean, folks, you went from 483 to 40. Okay, if you don't think you can go from 80 to 40, I'd check that math, and maybe you're going back to $20. Stay tuned, folks. We got a lot to talk about. I'll be right back on Friday.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. We get the S&Ps negative by 31 points right now. We got about 12 minutes to go until the opening bell. NASDAQ 100 just under 14,000, 13,997. We jump around to some of the articles out there, other news items at least going on today. And jumping down the line for stocks making news. So Moderna is going to seek FDA approval for a second booster shot for everybody aged 18 and older. Now, just a couple of days ago, you had Pfizer coming out saying their booster shot, second booster shot would be for everybody, I believe, 65 and older. Yes, there it is. Comes a day after, just a day after, time flies, that Pfizer and partner BioNTech asked the FDA to approve a second booster for people 65 and older. Moderna, they've been in the press a lot recently, not always for good reasons in terms of their CEO selling a lot of stock, but they are getting a lift today. You're up $4 from Moderna shares to 172. Now I'm going to jump around because this article, I believe our man Dave posted it in the den earlier. I was talking about it yesterday as well, and nothing wrong with it, folks, in terms of this is how the world works, okay? Moderna CEO has sold more than $400 million of company stock during the pandemic. Can't blame somebody that takes over as CEO in a period of time much different from where that company is right now, okay? Because this article also out there, now this is a week ago, that the Moderna CEO is set for a soft landing as a golden parachute swells to $926 billion, staggering amount of money, of course. But what they talk about here is the rise in terms of what happened when they came out with their effective COVID-19 vaccine. So they went from revenue of $803 million in 2020 to $18.5 billion last year, 807 million doses of its mRNA shot, and they expect this year $22 billion. That is quite a rise in revenue, to put it lightly, to say the least. So however you feel about the golden parachute, that we could probably spend a whole hour on. But nonetheless, you know the CEOs have shares. You can't blame somebody when all of a sudden their equity in a company, I mean, Moderna's run, folks. Let's back it up to the beginning of COVID, okay? You came into COVID in February of 2020 at $33. This stock was pushing above $250 for over half the year. That's an 8-time acceleration at least, and that's $250, let alone these lofty numbers of 500. Now, what I'm going to point out here, okay, is number one, you always want to be tracking insiders, okay? Just because they know more, folks. You know, These CEOs, they set up exit plans specifically so that they don't try to trade their own equities in the likes of Bezos, et cetera, because it's so difficult in terms of how much information they're aware of. But you have to realize they still set up those plans ahead of time, aware of lots of information coming down the pipeline. All right, now, it wasn't just the CEO here. The other one to pay attention to in this is that a while back, and this really should have been a heads up, folks, and it might still be a heads up in terms of where the long-term value of a company like Moderna sits. Now, right now, at these prices, okay, you are talking about a company valued at about $77 billion, okay? That's for just some context. Pfizer, much bigger company, but Pfizer has a lot more going on than just Moderna does. Pfizer's a $305 billion company, okay? Moderna, though, Merck was a big investor early on. Let me make sure I get the right headline. Here we go. And I'm just Googling different headlines here. And the point is that back in late 2020, folks, okay, now this was after the vaccine had been developed, went through trials, and efficacies started to get released. If you remember, those efficacy numbers from the trials came out about November 2020, okay? At this time, Merck was well aware of what they had a stake in, okay? Now, to tie back to where we are, okay, here is December of 2020. $161 is where Moderna stock was trading at. Today, basically the same price. You're at $178, okay? That is where Merck exited their position. Now, it's not exactly where they exited because they actually exited in the first half of the final quarter of the year. So my guess is they were in this thing at 11. They saw their equity rise up to $100 at one point in July. They saw it give back all the way to $54, and executives at Merck said, guess what? We're not going to ride this investment down from $100 to $50 again. You started pushing that level again where you got up to $81 as recently as October 12th. Not recently, but October 12th. All right, point being, Merck exited that position somewhere here on the chart, okay? You have to understand that executives at Merck probably had some understanding, right? Being in that industry of the profit potential, of the value of their investment, and whether it made sense to hold or to sell. They decided to sell. They looked like fools when the stock ran up to almost $500. But folks, if you see the CEO selling throughout the year, you saw that Merck sold last year, okay? You see the parabolic run up you have. It's a perfect parabola, folks. We run up, we run back down, 150 to 500, back to 150. It's just important to get those reminders sometimes. And I can't blame the CEO, folks. He took a company that did $800 million to doing $18 billion in putting out a vaccine that has probably saved countless lives, to put it lightly. But guess what? The market pays for revenue and performance. It doesn't get much bigger than that, pushing a company from $800 million to $18 billion in 1 year transition. Can't blame somebody as a CEO selling when they say, hey, what's going on? I mean, Elon would do it as well, okay? They push out share offerings all the time to the public when the price gets too high. Keep track of those as well. AMC, they love their share offerings. I talked about it on my program yesterday. AMC has taken out about $1.25 billion, I think, last year alone. They offered at one point in June, I believe it was 11.5 million shares I talked about share offering at $50 plus, okay? The difference from the $50 that AMC pushed out, 11.5 million shares, and that's not even counting shares that they pushed out to the public earlier in the year as well, that raised 600 plus million. But I'm just talking about when they pushed out shares up in this echelon area in the middle of 2021 at $50 plus, they pushed out 11.5 million shares of them. The stock is down $35 over that period of time. Anybody who bought shares from the company at $50 plus, which is their average share price of 11.5 million shares they sold, okay, when you add up the entire wealth that AMC just basically stole from those investors because AMC pushed out shares. Now listen, it's a free market, folks, okay? AMC provided shares to their company. Investors put their own money at risk thinking it was a smart investment. Well, AMC was right because AMC took $400 million off of their scalps, folks, because that's the amount of money that 11.5 million shares lost from $50 down to the real value right now, $15. And AMC's got all that money. And now they're trying to buy gold mining companies, Hycroft Mining. That one's going to play out as well. All right, let's jump around to some of the FANG stocks as we wait for the opening bell. You got markets catching a little bit of a bid as we come in. Amazon, quite a couple days, quite a couple weeks, man. You look at that low on Amazon last week, $26.71. You're up almost $500 from that low. Let's put it back on a 10-day, 30-minute. There's your low a week ago Tuesday, $26.71. You really get the acceleration on Wednesday night where they start, they come out with the stock split. They're going 20 for 1. Again. And you have a little bit of a pullback, but man, since Monday's low, you're talking about $300+ more than a 10% acceleration on Amazon shares. And even today, Amazon almost flat with the market down a bit. We'll jump over to Apple shares. Apple flat as well. Going to be an interesting open. Some of these FANG stocks holding up pretty well. Microsoft down a bit, but as I said, Apple somewhat close. You got Amazon close to break even as well. Stay tuned, folks. We got the opening bell coming up. We'll be right back.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open, and you got markets catching a little bit of a lift right as we come into the opening bell. S&P's now negative by just 14 points. We're inching towards 4,400. You got the NASDAQ 100. We're above 14,000, negative by just 0.5% right now. The Dow off 84 points. Russell off about 8. Commodities, you got crude up $1 right now to 102.61. Gold contract down $15 at 19.28, and we jump to that note and bond sitting right at about 2.15%. The yield on the 10-year right now, 10-year positive by 3 ticks, 124.14. But man, can you even see any positive action on that chart? We've just been chopping around basically where we are since midnight Monday night coming into Tuesday, which is interesting considering the market action we've had since then. But yeah, you got the 10-year just chopping around basically right at around 124.5 since that period of time. All right, let's jump around to what else we have going on. It is a big day for stock traders today. We got a $3.5 trillion triple witching event. We got rebalancing going on the benchmarks as well. So as Bloomberg puts it, Wall Street traders bracing for fresh equity market fireworks. We don't get enough fireworks lately. Friday after another week of global turbulence. Triple witching, we got $3.5 trillion with a T of single stock and index level options set to expire. That's according to Goldman Sachs. At the same time, this is an important part, going to be interesting to see how the day progresses. More near the money options are maturing than at any time since 2019, suggesting a bevy of investors will actively trade around those positions. When you have an options position, folks, that is right near at the money, many times you might have to either get out of that position because you don't want to get exercised, right? More activity than normal. Once again, you have triple witching coinciding with a rebalancing of benchmark indexes, including the S&P 500. Now, this talks about that we've had the market just accelerate higher for 3 days, okay? But what it says in here is that some derivative pros, in the telling of derivative pros, as they say, the recent rally has been fueled by dealers covering short positions to balance exposures while demand for stock hedges is elevated. A little bit above my head in terms of how that all plays into things. But now as many contracts expire, and I'm going to explain that a little bit more because this is a cool article. Key question is whether investors rebuild their holdings of protective puts amid growth concerns, or will they chase the market and rebound it with call contracts? All right. So here we go. Exploding derivatives volume has been a fixture of the post-pandemic market, whipsawing underlying stocks in both directions again and again. You have one strategist out there saying the recent advance in the S&P 500 has again been amplified by the hedging activity of market makers. There's a lot of amplification going on in this market. And here's how they surmise it. It's a complicated process, but it works roughly like this. When a dealer sells a put option, okay? I'm selling a put option to Joe. So Joe is buying a put. Joe, by buying a put, wants the market to go down. Therefore, I, as the dealer, is essentially taking a bet on the underlying asset to go up. To offset this unwanted directional risk, dealers are not in the business of taking directional risk. The market maker typically sells some of the asset to maintain a neutral position. When the put option expires or gets exercised, it's going to reverse those hedging moves, potentially creating a tailwind for the asset. Another factor involving dealers is their current short gamma or short delta position that requires them to go with prevailing market trends, buy stocks when they go up, sell when they fall. Everything leads to amplification, folks. At the start of the week, their exposure on S&P 500 products sat at a level near the maximum short gamma relative to history. Across that 3 days later, zero gamma now. Dealers were forced to buy back stocks and close their short positions as that happened. That's led to some of the acceleration we've had over the last 3 days. So all of that is going to be in play today as $3.5 trillion comes into fruition at expiration today. And yeah, and the one thing that really is going to be interesting is how at the money or near the money options may play into things. Options either far out of the money or in the money receive less attention around expiration dates. Now, with an unusually large number of S&P 500 contracts sitting close to the spot price, trading activity on Friday looks to be more frenetic than usual. Excuse me. I don't know if we can handle more frenetic. We obviously can. But, man, we got a VIX that's sitting elevated at 25 plus for a while now, coming into a day that usually adds volatility in spades. So we'll see how that plays out. But interesting when you break it all down. All right, jumping down the line to some of the other stocks that are moving. U.S. Steel, they're lower in pre-market. We'll see how they opened. Weaker than expected guidance. Increasing raw material costs, among other factors, should not be surprising that they're dealing with raw material costs. U.S. Steel, and yeah, they're down about 3%, right where you were pre-market. Taking a little bit of a longer-term look for U.S. Steel, man. Whew, right? You trade up to $47 in 2018, down to $5 in the COVID lows. You're sitting at $33 right now. These commodity companies, man, no matter what you're in, quite the acceleration. Even with a 3% pullback, this thing just traded from under $20 to $33 for U.S. Steel. Boeing, so they're in talks with Delta. How about 100 737 MAX 10 jet orders? That's quite a number, man. But not surprising, folks. All right, we are in for quite a period of travel and leisure, I would say. Boeing, I had been talking about it. Not easy to buy Boeing in a downtrend channel, but we have gotten quite a bounce here. I mean, you push the top end of this channel line on Boeing, you're talking about $215 maybe to touch the top portion. We're trading at 191. You have Boeing up today on that news, 0.9% in the green, when you have the market slightly in the red right now. We jump over to some of the airlines. Delta down with the market down 1.2%. They've all caught a little bit of a bid right now as you had oil prices easing from 130 to about 100. You jump to American Airlines, pretty similar action, all of them down a bit with the market. Let's see domestically how they're doing. Southwest a little bit less, as in barely negative by 0.1%, and JetBlue as well right now negative by about 0.5%. The cruise lines, Carnival down about 1%, NCLH, Norwegian down about 1% as well. Wingstop is down about 5% pre-market. Double downgrade from Piper Sandler to underweight from overweight. More difficult to keep premium valuation during a restaurant industry expansion cycle as higher expenses hit earnings. It's a lot going on in there. Wingstop. That's a tough one for you, man. Whew, you were just trading. This is a daily. You were just trading February 16th at 163, man, when they came out with their numbers. You trade down to 110. We're sitting at 116 right now, down 4% for Wingstop. Yeah, that's a tough one if they can't get everything they need. I imagine wings, one of the things, chicken, right? We've seen real food, commodity prices going up. Yeah, they are not immune. Joann, the craft retailers shares down 8+% in the pre-market, missed quarterly sales expectations. $90 million increase in ocean freight costs last year. Excuse me, $60 million. Where did I get 90? Ocean freight costs, among a number of significant supply chain headwinds and disruptions. I mean, you see how some of these smaller companies, man, it is very difficult. But look at that. Look at this acceleration. The market says not so quick. Always amusing to see how it reacts on the open after earnings, folks. Joann, barely flat after that acceleration lower. Stay tuned, folks. We'll come back 3 minutes.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps negative by 14 points right now. NASDAQ 100 negative by 52 points right now. Jumping over to a little Fed speak. So no longer a quiet period as we are after the Federal Reserve meeting. And maybe the biggest talk out there, at least on the Federal Reserve Board, the Fed's St. Louis Fed President James Bullard on Friday released a statement explaining his dissent from this week's decision to raise rates by a 0.25 percentage point. So he was the lone dissenter. Okay, he wanted 0.5 percentage point. Important to have that context to understand that he is the greatest talk out there, okay? But he wants 12 hikes this year, folks, 12 of them, to bring it to 3% from 0. That's a lot of hikes considering it's already March 18th and we've only gotten one hike. As the lone dissenter at this week's Fed Reserve meeting, Bullard said in a statement he would like to see the central bank's benchmark interest rate boosted above 3% from the near zero level. This would quickly adjust the policy rate to a more appropriate level for the current circumstances. I'm sure many agree with him. Inflation out of control. The Fed coming into this somewhat easy when you think about the fact that, yes, they have a plan right now, folks. They have a dot plot. They have a plan for the rest of the year. The thing that I will say is go back to look at how they were last year, okay, and what their plan was. Things changed dramatically. They are going to be data-driven. If inflation persists dramatically and you see a slowdown in this economy, that's going to be a perplexing situation of how they hike with a slowdown in the economy going on, okay? Chairman Powell says the economy can handle it. It probably can right now. If we get a slowdown over the next few months at the same time that they're trying to hike things dramatically, that's going to be an interesting one. What we are coming into, though, towards the second half of this year is we're going to start to come into some lofty comparison numbers on a year-over-year basis. And that's where things are still going to start to get interesting, and that is where I would imagine the Fed may start to deviate. Don't be concerned, folks, if you see some crazy numbers in March on the CPI. Oil numbers, I think our man Kevin Hincks put it best, saying video game style numbers. That's what it's going to be, folks. We got oil still sitting at above $100. Okay, gas prices at all-time highs. That is going to contribute heavily to the CPI data for March when we get that number in April. The Fed is not going to be swayed by that because they are expecting very, very high numbers, at least in the next couple months, okay? But on a month-to-month basis, they're going to hope to see that number decrease, and they're going to hope to see that number decrease over the next few months as we come into the second half of this year. Then if that doesn't happen, then if the economy is still doing well and we have inflation out of control, you might see 50 basis points. That's where things will change. Guess what? If the economy struggles, okay, and inflation starts to tame itself, maybe some of these supply shortages ease themselves, maybe we don't get 6 or 7 hikes. But nonetheless, it is interesting when we have a St. Louis Fed president, okay, a Federal Reserve regional bank president coming out here saying he wants 12 hikes this year. Folks, this is quite a market when you got a Fed president coming out and saying, I want 12 hikes this year, and we've only had one and it's March. Yeah, it's going to get interesting to say the least. Okay, jumping around to what else we got going on. Let's see what articles I got pulled up here. Yeah, we could keep going with the Russia theme. Coupon cash for dollar bonds is with Citigroup. So it seems like Citi is holding the coupon payments on $2 bonds for Russia, and that the nation has fulfilled its obligation to investors, even as bondholders in Europe say they have yet to receive the cash. Would not want to be Citibank having basically Vladimir Putin say, hey, guess what? We paid Citi, and Citi owes you the money now. That's like straight up mobster style, right? You come to somebody for money, and they said, well, yeah, I gave that money to Charlie, so you go get it from Charlie, because Charlie, I gave that money to Charlie. Charlie can pay you. Yeah, good luck to that one. But it backs up earlier reports that J.P. Morgan had processed the $117 million funds and sent the money on to Citigroup, which had spurred a rally in bonds and driven down the cost of insuring the nation's debt against default. Russian credit swaps on Friday imply a 48% chance of default within a year, down from 60% just Thursday morning. Still, 5 bondholders in Europe say they haven't received the coupon payment as of 11 a.m. London. I can't remember a time when there has been more uncertainty over a sovereign. The Argentina default back in 2001 was messy but predictable. Argentina, not quite the same league. That's a portfolio manager at 24 Asset Management. Far more difficult due to the global sanctions. Yeah, confirmation that Citigroup has the cash is the latest update in the coupon payment drama that has come to represent Russia's new and complex relationship with the rest of the world. That's putting it lightly, folks. Going to be interesting to see how that one plays out. All right, let's take a look at MQ. For our man Ray in the den. MQ, not familiar. What do we got here? Let's jump over to the Analyze tab. MQ, Marqeta, providing modern card issuing and payment processing. So payment processor, they operate the Marqeta platform, cloud-based open application program interface platform, enables businesses to develop modern frictionless payment card experiences for consumer and commercial use cases. Slide down, they do have it. So they're a $6 billion company right now. We'll pull this up. They're up 2.5%. There's a pop for you. Looks like it wants to break out. Yeah, I mean, the tough part is, Ray, you just got this thing, and I'll pull it back even further, you know, up $3 from $8.24 to $11 and change. Quite the acceleration yesterday. I'm not sure if anything is going on with this stock, but boy, that is a tough one when you put it on a weekly, man. I see this thing just chopping around between 10 and 12. I mean, the highest volume bar I got on this thing on a weekly basis, you're doing 61 million shares, pushing a low of 883. Yeah, and then it makes a low of 824 last week. Let's see if we put this on a daily going back. I mean, yeah, maybe this is the consolidation, right? Between about 1250 and maybe you're at about 845 down there at the lows. Not familiar with the company, but man, I'd really like to see maybe a breakout area above this chop out area, maybe 1250. Maybe you break above 1250 and then come back and test this area that it's been maybe an area of resistance, right? And that area of resistance, I'm going back to basically, it's a pretty short-term resistance area, as in you're only going back about 6 weeks. But you trade above 1250, maybe you come back and test that area, and maybe that's your buy. Maybe it's a little lower. Maybe it's about $12 or so. But yeah, I would look for an even bigger one, and I'd look for a little bit of a pullback, man, because you're on your 4th green bar, and you just traded up almost 50% of this equity from 824. And guess what? The last few times we've done that, we've had a pullback, man, and you're nearing the top end of that consolidation. All right. The other thing was Ray mentioning in the YouTube Tiger's Den that we were chatting about Google, talking about Google and Amazon. Yeah, buy Google and hold for 21 stock split, no brainer. Like anything, and I know you know it, Ray, nothing's no-brainer, right? Everything has its risks. But pretty interesting that you got Google looming out there with a 20-for-1 stock split. You got Amazon looming out there for a 20-to-1 stock split as well. Both magnificent companies. You've had quite the pullback. You got Google shares trading at $26.73. You touched 3,000 a couple times. Not quite back to even the 382 though, from its entire run up of 1,400 and change to 3,000, folks. And that's only from late 2020. You jump to Amazon shares. A little bit of volatility to the downside recently, man. You were just trading right now in basically almost a 2-year consolidation for Amazon. Stay tuned, folks. We'll be right back to finish up the program.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We have the markets inching toward flat territory right now. You had the S&Ps. We were right up there near flat. You were pushing 4,400 in the S&Ps. Right now, you're negative by 9 points at 43.93. We jump around to some of the stocks that had their numbers last night. Amazon not Amazon, FedEx selling off a bit on the open from 222 down to about 215. Took a look at FedEx earlier in the program, right back to that 50%, pretty close to the area. The lows we had in October, 216.34, so just under that lower area. You're looking to get into FedEx, maybe 186 is the area that you get into that, the 618. Backing things up even a little bit further on FedEx to see the run. I mean, you're in an area right now, maybe you catch a bid from where you were in terms of the highs of April of 2019. That's just near about $200. But boy, you get below that area, and it's kind of a quick slide. Either when you go back to the end of 2018 in terms of how FedEx traded from 231 down to 158. We came into COVID at 163. Remarkable, the acceleration, but you're back to that 50% for FedEx shares. We check in on GameStop on their numbers, down about 2.6%, but catching a bid on the open on GameStop. We jump over to AMC shares, up about 1.4% today. We jump over to some of the other FANG stocks. With the NASDAQ 100 just going green, you got Google shares down about 0.8% right now. We got Amazon positive by 0.1% right now. Apple shares flat right now. Microsoft shares a little bit in the red with the NASDAQ 100 in positive territory. We jump over to Tesla, up by 1%. $880. Remarkable the acceleration Tesla's had as well, from 755 on Tuesday to 880. Just that quick this morning. And let's jump to commodities. Crude pulling back a bit. Folks, these moves don't even look dramatic because of the moves that crude has had recently. Yeah, can you even find a pullback basically? But crude just dropped, folks, $1.25 in the last 11 minutes. We live in interesting times, as they say, folks. It's going to be an interesting Friday. As I mentioned, $3.5 trillion in single stock and index level options set to expire. That's going to be a wild one. Index rebalancing today. More at the money options than any time since 2019. Get ready for the volatility, folks. Stay tuned. We got our man Basil's up next. We got live programming all day, folks. Basil, Larry, Fast Market, Steve Rhodes, Dave White, Tom O'Brien this afternoon. Have a great Friday, everybody.